Hey, Tim Bratz here. I want to talk to you guys about the benefits of investing in commercial real estate. Number one, the scalability. I love being able to go out and negotiate with one seller instead of 40 sellers, right? If I'm going to buy a 40-unit apartment building, I talk to one person, not 40. I go to one site, not 40. I look at one roof, not 40. I go and look at one foundation, not 40. The contractors and rent collection and property management only has to go to one space, one location, not 40 locations. It's a lot more scalable. You get insurance on one location instead of 40 locations, right? It's a lot more scalable. You can do a lot more. It's actually easier to manage a bigger deal because of the scale that apartments have versus single family houses. Number two, there's more equity in apartment buildings than there is in single family. Here's what I mean by that. You're talking about bigger numbers. You're adding zeros onto all the values. So when you're going out and flipping houses, or at least when I was flipping houses, it was hard to bring in all these different A players and carve up 10, 15, 20, even $30,000 worth of profit amongst 3-4 different people, right? There's too many hands in the cookie jar. When you're doing apartment buildings, you're talking about hundreds of thousands, if not millions of dollars worth of equity in any given deal. So now you can partner up with different A players and bring on somebody who's phenomenal at project management, bring on somebody who's phenomenal at property management, somebody else who gets involved from an asset management standpoint or fundraising standpoint or loan sponsorship standpoint. All these different players can be involved, and everybody, it can justify everybody's time because there's so much more equity in a deal. You might have heard me say before, I'd rather have 25% of a watermelon than 100% of a grape. Does that make sense? Meaning there's a lot more juice in the squeeze of 25% of a watermelon that's this big versus 100% of a grape that's this big. And here's the other thing, it's just more fun, right? I don't have to do 100% of the work and be the mule that I was when I was investing in single family. I can be more of a magician over here, focus on the things that I'm really good at and the things that I really like doing, and not have to do those other parts. I can partner up with people where that's their core competency, that's their core ability, where they can focus on those things. I can focus on what I'm good at, and guess what happens? 1 + 1 = 3 in that equation. We can do more together. Number 3, residual income. I think everybody gets involved in real estate because they have this allure of residual income, passive income, that mailbox money that we all hear about, right? And we all want it, but then we all fall into this transactional trap of trading our time for money. Meaning, when I first got involved in real estate, I thought I had to go and stockpile a bunch of cash in order to go and invest in passive income producing assets. Not the case. But I still went over, I started wholesaling, I started flipping houses, I was doing all this transactional stuff, and it was just a high paying job at the end of the day. Buying apartment buildings and commercial real estate, there's ways that you can take fees on the front end that cover all of your expenses, right? You take a fee of 1, 2, 3% on the acquisition of a commercial property. And if you're talking about a multi-million-dollar deal, you're talking about an acquisition fee that's in the hundreds of thousands of dollars. That keeps the lights on, that keeps food on the table, takes care of your overhead, right? And at the same time, you're actually buying assets that produce passive income, that produce residual income. Every single month, on the first of the month, my tenants pay rent. If I have a 100-unit apartment building and the average rent is $800 a month, I make $80,000 the first week of the month. That money will go to operating expenses, that money will go paying debt service, and that money will go into my pocket. I can spend all of that money. You know what happens on the first of the next month? They fill up my bank account again. I can spend all the money again. You know what happens in the first of the following month? They fill up my bank account again. That's residual income. That's passive income. Well, it's passive if you have the right people in place, right? You got to have a team, and you got to have property management partners. You got to have asset management partners. You got to be able to understand how to operate a team and run a team of people. It's not as difficult as you might think. So number 4, let's talk about the tax advantages of commercial real estate. One of the things you got to understand is that since the beginning of time, or beginning of civilization at least, wealth has been measured in land ownership. And the landlords have always been the ones who made the laws, made the rules, including the tax laws and the tax rules. So commercial real estate investors are way better off and have way better tax advantages than any other business owner out there. And I'll give you a couple examples. One is depreciation. You know, we all heard of depreciation. Property values over time go up. Yet the tax law allows us to depreciate the value of the buildings and of our properties over time to offset the income that it produces. It's wild, right? But it's one of those tax benefits that landlords and landowners have. Another one, 1031 exchanges. When you sell one of your properties, and let's say you buy an apartment building and you're into it for $1 million, you sell it for $1.5 million, you should have to pay taxes on $500,000 there, right? What the tax law allows you to do is roll that money into another property, and you can buy another property, a bigger property, maybe in a better area, and you can kick that can down the road, meaning you don't pay any taxes on that $500,000 gain until you actually sell the final property down the road and you realize that actual income. If you keep on selling and trading up and trading up and trading up over your lifetime, you know what happens when I pass away? My kids inherit my properties, and the tax liability is reset at whatever the value is at the time of my death, and they never pay taxes on that. It's one of the reasons why the wealthy grow wealthier over time, right? And why you can create that generational wealth. Another thing, tax-free refi proceeds. One of the main reasons that we do this, is, that I have the business model that I have, is because I'm able to buy an apartment building at a low value, at a low basis. I'm able to renovate it, and then I'm able to put good management in place, good tenants in place, and I've been able to increase the value of that building so much that the bank is willing to give me a new loan. So I might be all into a property for $6 million that's worth $10 million. The bank in 12, 18, 24 months from now is willing to give me a 70% loan to value loan, meaning they're willing to give me $7 million on a $10 million valuation. With that $7 million, I'm able to pay off my acquisition loan, I'm able to pay off my equity investors, and then there's still $1 million of non-taxable refinance proceeds in that property. I'm able to then carve that up amongst myself, the joint venture partners, and our equity investors, and it's non-taxable money. One of the other tax advantages is long-term capital gains. If you go out and you have a job and you're selling businesses and flipping businesses and doing some things like that in a time frame of under 12 months, even including real estate, you're taxed at whatever your earned income tax bracket is that year. You're paying normal income taxes on that. If you own that property for over 12 months, it's reclassified as a long-term asset, so you only pay long-term capital gains. If you're in the highest tax bracket between state, city, and federal taxes, your earned income tax bracket would probably be somewhere around 50% of your income is going to taxes. So if you can reclassify to long-term capital gains, right now, I think the long-term capital gains tax bracket is right around 20-21% for the highest tax bracket. So there's some massive benefits to recategorizing your income in a way where it's not short-term income, it's long-term capital gains, and only through business ownership and real estate can you do that. The fifth benefit to owning commercial real estate is building legacy wealth. It's what I live by. It's why all my company names, my investment fund's Legacy Wealth Fund, right? My education platform is the Legacy Wealth Education. My podcast is Legacy Wealth Show. My investment company is Legacy Wealth Holdings. I believe heavily in legacy wealth. And the way that legacy wealth is created is by buying assets that you can provide enough value for other people that they're willing to pay you for that asset. And they make payments to me every single month on one of my rental properties that cover the operating expenses. It actually pays down my loan and my investors, the tenants do, and puts cash flow in my pocket on a monthly basis. Over the course of time, that property appreciates. Over that course of time, the principal pay down on that loan is so significant that 20, 25, 30 years from now, depending on the type of loan that I get, that property is owned free and clear. And values have gone up so much that I've created legacy wealth. Millions and millions, if not tens of millions, hundreds of millions of dollars, maybe billions of dollars of equity in these properties over the course of time. It's by buying assets where you create enough value for other people where they're willing to pay you for your asset, and they pay your bank loan, they pay your operating expenses, they put cash flow in your pocket, and you're able to generate massive wealth over time and hand it off to your kids. Change your family tree forever by doing this type of business model. All you have to do is buy assets. Buying commercial real estate, what in my experience has been the fastest way to generate that legacy wealth.